kind of go through the market today a little bit. Just a quick little market review, nothing crazy. But I figured, I think by now, if uh, if anyone has watched the 2025 mentorship so far, hopefully you have. If you have, hopefully you can start to see it all come together on the charts. So I think today, just going to kind of go through some of the trades we took and just go through the market order flow a little bit based off, the 2025 mentorship episodes so far. Yeah, this is being recorded. This isn't anything formal, but just I'm just going through the charts. So if you want to hang out with me while I do it, it's live. So mostly just based off the mentorship stuff because every time I go live, I just want to make sure I'm referencing everything that I'm teaching in the mentorship section. Just to show you that when we go through the market and we go through the charts here, that everything that I'm going through in those episodes all ties together for a reason, and we can see all these signatures in the chart. So that being said, let's kind of dig in a little bit. So specifically, I'm going to kind of go through the market review based off Q3. So Q3 fair value gap, inverse fair value gap trades, which we took several today. And then also, so that's episode 3. And then episode 4 talks about, the 5 and 15 minute order flow. Let me see something here. Okay. So right off the bat today, we had 10 o'clock news today. So if you guys remember on stream, I was trying to get a trade prior to news. And we had this Q3 here. So we came up. Now notice we had this 5-minute BISI here that was we had marked out, right? Now this goes into episode 4, how since again, this could be fractal, so this doesn't have to apply. Like, let's say you're somebody that trades higher time frame. I trade the 1 minute. It's not good or bad or anything. It's just kind of up to you. But since I trade the 1 minute, I pay a lot of attention to 5 and 15 minute PD rays and the 1 hour stat map. So I basically am almost kind of looking for a trade every hour for the most part. Now, part of that is just because I trade all day long. Also, when I'm streaming, of course, everybody has, they're popping in and out at different times. So I'm essentially trying to catch as many trades as I can. But the 5 and 15 minute order flow, remember that creates floors and ceilings for us, right? Until they either get inversed, or if there's like a time level nestled within them as well, they're also more powerful. But yeah, this 5-minute BISI right here we had marked out. So price at the opening bell, we just start moving away from it. So it was kind of bouncing around it in here in the pre-market. Opening bell, we start repricing up. We get a little liquidity sweep right here going into Q3. Now remember, every time we're approaching Q3, I'm immediately starting to look for signatures, right? Every single time, because these are where the most high probable models tend to occur based off these setups. So this little sweep of liquidity going into Q3, what happens here? We sweep this, we come back down, we inverse this BISI that was created on this leg, right? And if you have, you don't have to draw that out to see that this is in the premium of this leg. So all criteria was met to take a potential Q3 inverse here, and this is the one we took on stream. It was just a little scalp, nothing much. I was hoping for a little continuation, but again, it was prior to news, so the model appeared, we took it. So sweep of liquidity, inverse BISI, we went short right here. Now, based off the model, we want to target. There's 2 different ways we can use this model to target liquidity. Either we target TMSO, right, or we target candle body liquidity. Those are the 2 targets we want to reach for the Q3 model. So this one in particular, when we went short, we got TMSO, right? So that priced right into TMSO, and there's that immediate reaction. So we got filled there, thankfully, and then of course news popped it up to do another sweep, like a double tap here, and then it came back for that candle body liquidity. then as we can see what happens here, price continues to flutter around inside this 5-minute BISI. Now, if you remember on stream, I was saying, I'm open to shorting, but I'm going to stay off of shorts here because why? This 5-minute BISI is continuing to hold price, right? We're continuing to use this as a floor, and I don't want to short into this 5-minute BISI, right? So like I said, if shorts were going to happen here, I was just going to let them play out. And if anything, I was going to look for a long down here where I had another 5-minute BISI, okay? Another point of interest down here. And of course, we have our New York Open here too. So really tough to short into New York Open into this 5-minute BISI after we've already swept all this liquidity, right? So nice Q3 trade there. Price bounces off this 5. We start pushing up. And then we get, this is the other Q3 trade we took on stream here. So again, price here just kind of pushing away from that 5-minute BISI. So there's nice long potential in here if you use this inverse paired with TMSO. So, that could have been a nice long. But again, I was waiting for Q3 here. Q3 comes, we sweep this liquidity right here going into Q3. So that's the first part of the signature we're looking for. We sweep this. Also, we sweep this. Price then reverses, comes back up, inverses this SIBI after this sweep here. And this is in the discount of this leg. So all criteria met again here for this Q3 model. On stream, I immediately click this long. I market it in right here. And yeah, short, but remember the criteria, right? So for the short right here, that this right here, so you're talking about this right here, right? Because it's good that you bring this up so we can go through it. So let me delete. Oh, no, not that one. Which? Oh, you're talking about this right here. Oh, the BPR. Sure. Yeah, totally. Yeah, you could have taken that short. Now, it's kind of hard, this situation here, because you don't really get that retest, right? So, again, I skipped this on stream. Oh, you're talking about this one, D3? Let's go through it. Let's go through everything for you guys. Let's look at all scenarios here so we can kind of pick it apart, right? And see why things work and why things don't. Okay, so yeah, let's look at this. So one might say, okay, well, wait a second. We're in Q3. We just got this inverse. Why don't I short here? Right? Why don't I short here? We got to sweep all this. You can consider a sweep of liquidity, right? So if we pull the leg here, it's too low, right? So we have a little bit of criteria met. We got a sweep of all this liquidity. So, that can send a light bulb off, right? Sweeping all this liquidity. You did get this BPR here, which typically can signal trapped. This would be trapped buyers, right? BPRs signify, trapped buyers or sellers in most cases. So the only thing that's not high probable here is that this was inversed in the discount. So exactly. So for the model itself, D3, all criteria needs to be met for that model to be high probable. Doesn't mean you can't take shorts in the discount of a leg. I mean, there's times where that will work. However, when you do that, you need to have an additional point of confluence, which when I say additional point of confluence, if you're going to short in the discount of this leg here, you need a time level in here. You would need like midnight open, a New York Open, something, a major time level that gets closed below or something. Otherwise, you're basically shorting in the discount here, which we don't want to do that, right? Part of this model here. That makes sense? So instead what we want to do is be patient. Be really patient here because let's see if I can flip. Without losing my spot here. So where was that? That was here. Yeah, so we didn't have a 5-minute. Didn't have a 5-minute. What did we have here? 15-minute was kind of messy too. It's just a grind. So you need to be really patient in these scenarios. So you see that in a discount, you either can skip it, right? Or wait. You could just be really patient. And once we get the sweep here, we're sweeping all this. Again, that light bulb also can go off. Okay, to now be waiting for that potential Q3 inverse, which happened here. and that's the one we took on stream. Now this one, now are we in discount for the long? See how we pushed into discount here? Now this gets inversed. It's right at the equilibrium of this leg. So you can take this one, right? And that's the one we took on stream. Now where do you target? So I marketed in as soon as we inversed it. I didn't wait for the retest on this one because I was kind of thinking this one might just go. You still would have been able to get in on a retest, but it would have been, you know, really quick. A couple ways you could have placed your stop. You could have placed your stop, you know, back below TMSO, so you could have kept it pretty tight. Could have placed your stop below this sell candle here, below the 50% of this sell candle or so. If you want to be really risk averse, technically you could use a swing, but you would need a much bigger RR for this particular setup. So this here, targeting this internal high, either candle bodies or just the swing itself. Played out really beautifully, and then this ended up just continuing to pump all the way up until we reached this. Now, this was the 1150 macro. So that's pretty good. So far today, you know, going through here on the Q3s, we're 2 for 2, right? 2 for 2 using the model and the criteria. Just had a Q3 for tonight. Nice, Bill. Good stuff. Yeah, it even works in Asia. So 2 for 2 on these Q3s so far, and we did take both of those on stream. Now, on your Q3 stop outs, do you typically use the body close outside the fair value gap or below the candle? Yeah, you know, Billy Bob, it kind of depends, man, to be honest with you. Technically, I mean, technically this long can remain valid until we lose this swing, okay? Because this is this turtle soup. Now, if you're not comfortable with that, because, you know, that's a lot of drawdown, right? If it's too far away from you, there's a couple things you could do. You could use this fair value gap if we inverse this and close. This is the nice thing about time levels and TMSO especially. TMSO will typically act, you know, once we get the model, or some sort of order flow change after this turtle soup. If price comes back, we'd like to see TMSO be respected at this point. So you could tighten it up a bit, and if we lose TMSO, you could stop out. If we inverse this BISI, you could stop out. Close below this candle, this sell candle right here, doesn't support price, you can stop out. So that's kind of up to you. You know, a lot of times too, if you're, you know, patient, you get that retest, you get a better RR. You know, there's just times, I don't know if I could teach this. It's more so about candle speed. That's why I marketed in on this one. I just jumped right in. But because the speed, this candle, if you were to watch this back in real time on the stream, I think I have it in my trade recap video. It was really aggressive, right? So I was just trying to mark it in as soon as we got that inverse for Q3, just because I trust this model. I trust this model a lot. So anyway, you know, you could have held that. I know some of you guys held that long for quite the push. But, you know, I was just targeting these highs. Like I said, I was going for base hits mostly today, pre-NFP. And then this was the 1150 macro. So we kept pushing. Now, if you guys remember on stream, so we'll go through the lunch sweep real quick because this is something I haven't taught yet in the mentorship. It is something I've taught in Kingline. It's a bit of a finesse trade. If the conditions are right, it's a really sweet trade. So 1150 macro. Let's see, let's mark that out. So 1150 to 1210. Okay, here's our 1150 macro, 1150 to 1210. There's a very unique signature that happens during this time of day. It's very, very high probable. Now, again, I have to say this at any time, like just with the Q3 model, just with any other model I teach, that's, you know, very high probable. Nothing is guaranteed. Nothing's 100%. So you still must use risk management. Okay. Episode 1 of the mentorship is the most important episode out of all of them. It doesn't even talk about a single model. Okay. It talks about risk management. It talks about trade management, psychology. So regardless of how high probable a model is, you need to implement episode 1 above everything. Okay. But anyway, price creates a impulse leg up here at 1150. Now, during this macro, if you guys know, if you trade with me, that this macro typically, more times than not, regardless of the day, regardless of what's going on prior to this macro, it's typically a very bullish macro. Okay. Doesn't always, run bullish, but typically it's bullish. Now, if it is a bullish macro and we immediately push up, and we've been pushing up this whole time and it continues to run up, it'll typically leave untapped imbalances in here on the 1 minute chart. So immediately we have this one that was untapped, we have this one that was untapped, and we have this one that was untapped. When I see this signature this time of day, right around 12:08 to 12:10, this is when I started a short. Okay. Now remember on stream I was telling you guys, look, I'm taking this trade strictly based off a time model. I'm trying to short the trend here. Just keep that in mind. And we just manage our risk based off the probabilities of the model. So I went short here at 12:08 p.m. on stream. And what were we doing? We were targeting untapped 1 minute PD arrays, right? That's what this model wants to do. Now, this is a scalp model. It's not a model you want to try to hold for bigger moves typically, because a lot of times the lunch sweep just comes and reprices those imbalances that were created on this impulse leg and then continues to run higher. So when we went short here, this is the one I was targeting. We got it. So it was a nice trade, just a nice, short from the end of the macro into that 1 minute PD array. Price did, if you guys remember, I had this 5 minute BISI marked out. This was that 5 minute wickless. There was a 5 minute wickless BISI right here. So price did end up going all the way back down to still hit this untapped imbalance right before 1150 into that 5 minute BISI and swept that wickless candle. But before that, we were stuck in time distortion. So after this trade ended, this Q3, right, was pretty tricky, right? I remember this one, we had a couple, I had a quick stop out. I stopped out once and I scalped this long into TMSO, hit break even, and then just waited. So when we get the time distortion inside Q3, this is when it gets a little tricky. You see, we don't really have a nice leg here to measure premium and discount, do we? It's just straight sideways. Everything is sideways. So it's just consolidating around TMSO. Then price finally prices down to that 5 minute BISI. And this is where I was still saying, I still think there's a good chance we push up towards 800 today, 21,800, as long as we still hold this BISI, right? Because this is that 5 minute BISI with the wickless. Price souped all these lows out of time distortion. Nice signature there. Made this inversion. Swept all these highs. This is, a lot of inducements here. So swept all these highs, comes back, reprices this inverse, pushes up, and then we get another Q3. So this Q3, impulse leg up. So we have a nice premium leg here. Okay, get an internal sweep here. Price closes back through this BISI, get this inverse. This is one where you could have just put your stop at the highs, because it was a really nice inside of premium here. And again, there's two different targets we can target here, TMSO or candle body liquidity. This one ended up pricing into candle body liquidity here. And looks like it finally tapped into this untapped P array as well. So this would also been a nice Q3 short. So far throughout the day, 3 of the 4 Q3s were, the model appeared pretty nice, delivered nicely. Oops. And then let's go into the end of the day. Price sold aggressively all the way back down to one of our favorite time levels. I don't have it marked right now. Let's see. Let's find. Where is 130? $1:30 p.m. opening price is PMO. This goes into episode 2 of the mentorship, where we talk about key time levels, right? Midnight open, New York open, 7:30 a.m. open, and PMO, 1:30 p.m. open, and all the TMSOs. So 1:30 p.m. open, as you can see after it printed, was a really nice floor support, right? And then price gravitated back towards it again right near the end of the day here, swept all this liquidity, which should get a light bulb, right? liquidity sweep going into what? Anytime we're approaching Q3, we need to have our light bulbs go off because we need to be watching for any liquidity sweeps, PD arrays, time levels, everything combined, right? So Q2 price is dumping really hard, find support at PMO, sweep all this liquidity. What happens here? We have a leg to measure, discount of the leg, price inverses this, SIBI inside of Q3, just so clean, man. It's so good. Price comes back, retest it. So this is one where you get a nice retest. So again, as far as stop losses go, there's a couple ways you can approach this. Okay, you can go below this sell candle. If it doesn't support price, you can stop out. You could use PM open. Since price is holding PM open so nicely, you could use PM open as your stop loss. Again, kind of up to you. I like just below this sell candle. You get that, and then what do? You target TMSO or candle body liquidity here, or even just the highs, whatever you want. Typically, anytime I take a Q3 inverse model and we pump up into like TMSO or something, that's a good time for me to protect the trade, go break even. And yeah, price continued to push all the way up right there into the bell. We almost got to 800. We got to, what was that, 21,795, 25, right into that 15-minute PD array that we had marked out early in the stream. If you guys remember that, that was like right around the opening bell. We had marked that out saying that there's a chance price might want to go up in there today. Again, this is just using 5 and 15-minute PD arrays, using order flow, marking them out on where price could potentially price to, right? So if you look on the chart here, we have an untapped 15-minute SIBI right here. That's above all these highs, right? So I'm assuming that if price wants to come up and run through all these highs, where could it find, where could it reach its headwind? Where could we find a place it stops, rejects? Where could we find a place it's trying to reprice to? Because the market's doing one of two things. It's either looking for liquidity at highs or lows, or it's looking to rebalance price inside untapped PD arrays. So this one, got tapped there right at the end of the day with the Q3 model. And look, we even got another Q3 right here. Liquidity sweep. Inversion made here in Q3. Retest. This one you could have targeted. This is the one Bill was talking about, I think. Candle bodies. Really nice model, guys. Very high probable, very clean, very trustworthy. Of course, it's not 100%, but as you can see today, all Q3s delivered our model very nicely, except for one, and that was in time distortion, right? But using what we talked about in Mentorship episode 4, with 5 and 15-minute PD arrays being our floors and ceilings, this was also nice to see. So, yeah, good stuff. I just want to come on and just review some of those trades that we took today. Just show the Q3 model in action some more because I really believe in it, and I think it's a really good model that you could use. Anytime, as long as you get that criteria. The criteria is the key, right? So, does anybody have any questions or anything you want me to check out? Yeah, Q3 model was fire today. Took almost all of them. Yeah. So this is something that is controversial, I guess. I don't really ever have a daily bias. I mean, I have ideas of where I think the draw and liquidity might be for the day, but I never get married to any bias on the daily, just because NQ can be one tricky animal. So the reason why I teach 5 and 15-minute order flow is so you can flow with price. Now, of course, I could be bullish on the day. Doesn't mean I can't take shorts, right? I could be bearish on the day. Doesn't mean I can't take longs, right? Because inside of any day, you're going to have time distortion. You're going to have manipulation moves. You're going to have distribution moves. You know, you can still trade manipulation moves. You can still trade distribution moves, but don't be so stubborn to the point where you're so stuck on a bias that you're only taking trades in that direction where you think price is going to go. Because as much as we can, you know, assume price is going to go towards some sort of liquidity draw, we can't force the market to do anything. All we can do is read the signatures that we know are high probable and then act on them and manage our risk. So I have no problem flipping long, flipping short, you know, based off what price is kind of telling me, right? I'm just trying to flow with price. And that's where that 15-minute and 5-minute order flow and PD rates come in, you know, because again, if you were really bearish today, like, look, I can see why people would be bearish here. I can totally see it. Look, we swept all this liquidity up here, right, with that 10 a.m. news. Swept all this liquidity. We still have LR here to potentially run, right? And we have all these lows. So I can see why someone would be wanting to short here, totally. But the big key here is this 5-minute BISI that's been supporting price. We're delivering from this 5-minute BISI, right? So right now, this is a floor until it's not, and that's why I was saying, you know, there's no good risk reward to short here. So until this 5-minute BISI inverses, if this were to inverse and we get a nice close through it, then what do? We use what we talked about in episode 2 of the mentorship, time levels, right? New York opens right here. If we were to lose this 5-minute BISI, inverse this, and we get a close below New York open, what does that tell us? Now we can start thinking lower prices. We can start looking for shorts on what? On pops back up. So if we were to inverse this, come down here, you know, we can look for turtle soup shorts at New York open, right? To then look to run this liquidity down here. But since we didn't inverse that BISI, that 5-minute BISI there, and we're still holding above New York open, you need to be really cautious shorting down here. Now again, doesn't mean you can't take shorts, right? You know, I shorted here. You could have shorted, you know, this Q3 here. There's still shorts on the chart, but you just need to be careful where you're shorting, right? And either treat them as scalps or leave runners. Does that kind of make sense? Does that help a little bit? But yeah, just a quick little market review. Like I said, guys, I just, you know, I want to keep going through these models with you guys because they're really high probable, really clean. And if you pair it with time levels and 5 and 15-minute order flow PD arrays, you know, there's a lot of good opportunities on the chart as long as you're always managing your risk, right? So that's pretty much it, guys, unless anyone has any other questions you want to go through or talk about. But like I said, just a super quick little review. Decided to say why not pop on. Yeah, cryptic. For sure. Yeah, so my next mentorship episode is going to flip back to, we're going to do a heavy deep dive into risk sinking and risk management. And I'm going to show you guys a diagram on the charts with candles of exactly how to do it. Okay. I did talk about it in one of the other mentorships, and I'm going to keep diving into it with you guys. So I'm just going to become a broken record so you can really tap into it and utilize it. Same goes for the Q3 model. Same goes for how we're reading price and time levels. You know, the more we go over it, the more we see it in the charts, the more confident you get, right? It's almost like you're back testing it. You're building that confidence. And then when the model appears, you're not frozen and you can take it, right? Because if you're scared to take the model, you'll never be able to take the model. So the more we go over it in the charts, the more confident you can become. Yeah, you guys, you know what? Remind me of that, Parves, because I'm so stuck in my habits, man. I got to remember to throw it up after I take the trade live. Yeah, Cryptic, what's up? Yeah, that's pretty much it, guys. If you want to bounce, you can. I'll hang around if anybody has a few questions or whatever, but I'm just kind of hanging out. But if anyone has any thoughts or questions, I'm happy to talk about it. Whenever I resistance, I become gun shy. How to overcome that on those? What do you mean whenever you're resistance? Oh, whatever. Okay. Whenever I reach static, I become gunshot. Oh, don't worry about the typo, man. I'm the king of typos. Nobody out typos me. So yeah. So if you're, I mean, that's a really common question. Um, I'll get to you in just a sec, Neil. Uh, yeah. I mean, once you get static, I mean, again, it just comes down to it's no different than any other account. You know, as long as you're again managing your risk based off the chart, based off the trade itself, and not over leveraging. I think what happened when today I took maybe like what 3 or 4 paper cuts. I still ended up, over $1,000 on the day. So, and I'm just using micros. Um, be really disciplined to wait for price to come to you. That's one of my best recommendations is wait for the trade to pop out and yell at you that, it's there. The model, whatever model you're trading, it doesn't have to be Q3. It could be anything. There's lots of models to use. But again, if you use everything Cryptic, you see this stuff all the time, right? So we have this signature here. Let's just look at this for an example. Okay. We're delivering from this 5-minute BISI, right? We know, so price right now is bullish until what? It's bullish until we lose this 5-minute BISI. Okay, so if price comes down, we have a really key time level here in PM open. We're holding that. We continue to hold that, and we're above the 5-minute BISI. We get the Q3 model. If you're saying I'm only taking this trade, the Q3 trade when it jumps out at me, all the criteria is met perfectly. We get that. You take it with manageable size. You don't have to over leverage here. Take it with manageable size and just manage your risk. The models are high probable enough that if you manage your risk properly, even the ones that don't work out, even the times you take losses, you have to understand that when you zoom out, like you look at a bigger picture, that you'll overcome those losses with the wins, right? And you can even start, there's something you could do too, like if you're static, you can even start with just a couple micros, just a couple micros. And if you want, you can average up. Like, let's just do a mock scenario real quick. I don't know. Let's see. Okay, price close. Let's say I'm waiting for a retest. Okay, I'm going in with 2 micros. Okay, just 2 micros here. Then I'm going to switch it to 1 because you know what? I'm going to say I'm either going to take a really small loss. Now, if 2 micros, if you put your stop here below, we have this key time level below this. Are you going to lose your account or lose any significant amount of money on your account if you stop out 17 points on 2 micros? No, right? Not at all. So knowing that, you can take it, start it with 2. True macro session open, Neil. It's a Q2 opening price. I'll show you that in a second. Okay, so price goes up. We can say, okay, I'm going to start with just 2 micros here. Okay, all right, nice. We got a close through TMSO. I'm going to add 1 more. Okay, add another micro. Stop goes to break even because we just averaged up, right? And let's say, we have our eyes on this 15-minute SIBI here, right? Knowing that price could go there. Let's see. Okay, let's say if we close over this high, I'm gonna throw on another micro. Okay, close on the high there. So now we're up to 4 micros. Okay, price is still getting really aggressive here. Let's say we get a new 15-minute open. Price comes down, still doesn't hit our stop loss. Let's say, okay, now I'm going to wait and see if we close back over this 15-minute open. Let's see. And if we do, I'll add another micro. I already forget. Okay, so we closed over the 15-minute open. Now we're at 5 micros. Okay, and now we can say, okay, now I'm going to hold for this high. Now I'm going to target this high. Let's see if we can get it. I forget if we dump back down or not. Yeah, we got it. Okay, so got that high. Strictly only doing what? Averaging up. Starting with extremely small leverage. We started with 2 micros on this entry. And we kept adding after what? Every time we closed up through a key time level or a 15-minute open, we just kept adding to the trade, right? Now there will probably be, you do this, 5 times, you might get stop break even 4. You might get stop break even 4 times, but the 5th time you kept averaging up and kept adding here, and we take that liquidity sweep high, you know, you're all out. You make 430 bucks. So now if you're static, you made 430 bucks, you withdraw that tonight. And you started with 2 micros with very, very, very minimal risk, right? You're not going to take damage there. Does that kind of help, Cryptic? I mean, it's just an example. I know I cherry picked this, but you know, there's tons of moves all day long. And there's, you know, this Q3, think about it on this one. If you would have averaged up 2 micros off this one, you're not getting stopped, man. It's just going to go, right? Again, if you do the average up philosophy like this, you have to be okay with break evens because you're going to get them. You're going to get a lot of break evens because as you're adding, your stop loss is going up higher and higher, right? But if you only got 2 of these moves today and you're averaged up on both of these, you would have maybe, let's say you got 6 break evens, but this one kept going for you, and then that one we just did, that mock scenario we just did, kept going for you. Probably made up over $1,000 starting with 2 micros. All right, let me go back to some questions I missed here. I went on a rant right there. So yeah, TMSO is just the Q2 opening price. See how I have Q3 here? TMSO is just the opening price of Q2. This has to do with 90-minute cycles. And it's a really nice time level to use as support and resistance and as a target level. So if we break through it, we want to see it. That's why I averaged up here. If you break up above here, you want to see this used as support just like it did. Just like when we took the trade here this morning. We went short here. Look at this. We targeted TMSO because this is a support and resistance level, time level. Had a strong violent reaction right off of it. All right. So Elias, yes. So when I'm averaging up, if you guys notice when I average up, it's always after we invalidate a PD array or close above a time level, because when I'm averaging up, my goal is to try to strategically do it to where my stop loss still gets protected below a PD array. So like let's say we took the long here. We took this long here. You know, you can say, okay, well, I'm going to try to hold for a huge move here. I'm going to wait until we invalidate this SIBI, and then I'll do an add, because now my stop loss should end up being like right around here, right? Because it'll go from here, it'll average up into here. Now we have this inversion to try to use as protection against our stop. So you have to try to, you know, it's a bit of a strategic play to average up. And again, LMT said it really good today. Yes, you could probably take a ton of break evens doing that, but all you need is a couple that don't do that, okay? And then you make up for all of it and more. You just have to flip a switch with your psychology. You have to flip a switch in there to be okay with that. Yeah, I mean, I don't always do it, Angel, but I do it when I feel confident enough to do it. Also, I'm trying to, you know, take a lot of streamed trades, so it kind of depends on what's going on during the stream. But yeah, man, anytime we invalidate a key time level, TMSO, you know, any DTT route, inverse a PD array, those are good times to average up. Absolutely, Rome. People think you can't make money with micros. Look, just because I'm not YOLOing minis and just buying a ton of evaluations, YOLOing minis. I mean, if you look through my TPT withdrawals, you can see them on my X account. You know, I shared my entire January. Not a single mini was traded on those. Where do you get your chart template? I'll give it to you right now. Good question. Actually, really glad you said that, Angel, because I don't. So the key when you average up is you average up, you average up, you average up, and you take it all off at once. Because, I mean, you could partial out if you wanted to. But the thing is if you partial out, like, remember how I added multiple times here? Let me just show you again real quick. Okay. I'm long. Whoops. Okay, added. Okay, add it again. Okay, so now we're at 5. So let's say now my stop's at break even, right? Now let's say I'm going for that high again, and I just want to partial out. You certainly can. Let's say I take off 3. But now my stop moves much higher, which is fine, no problem. But if you're going to partial out, you still need to make sure you protect it. It just gives you a much higher probability of another break even. I like to just average up, sell it all at once. What's the activation fee for TPT? It's 130 Martini. Yeah, that's another thing, Rome, too. When you're in micros, you can let the trade play out a little bit more, right? Because especially with the NASDAQ, there's nothing wrong with trading minis. If you want to trade minis, I'm not going to be like, do whatever you want to do. I'm just saying you can do really well with micros, and it's a lot easier on your psychology, and it's a lot easier to keep your accounts, especially if you're risk sinking. If you're risk sinking, which again, we're going to go over that more. It's really powerful. And it also allows you to average up more with micros, in my opinion. I think you have a lot more opportunity to add into the trade with micros. But yeah, totally cryptic. That's true, man. Because minis, you can be in a trade and the trade still be completely valid, but you could be in some pretty sweaty drawdown. I would say maybe if you're using minis, use it as an end of line risk sink. So if like you're taking longs, like let's see if I can find a better example. All these kind of went right after our entries every time today. Let's say you're going for the lunch sweep. And let's say you had different tiers of risk here. Let's see. Let's go short. I think on stream I said I'd give it like around 10 points or so. Okay. Go for that BISI. So let's say we have this drawn out here, right? This is going to be a quick crash course again in risk sinking. So let's say we went short here. Okay, that's my first entry. The trade's valid until this spot right here. So we got a 19-point total stop on the invalidation of the trade. Let's say I went short right here, right, on one account. Okay, let's say on stream I went short right here, but say on the DOM I have 2 other accounts that are locked and loaded, ready to go. Okay, price comes up here. I'm going to stop out of this account. Okay, as soon as I'm stopping out of this account, I'm entering short again on my second account, right? So I'm entering short here on my second account. Okay. Now I stop out here. I'm entering short again on my third account. So I have 2 stop outs right here so far. Now my third account is maybe, a really important account. Maybe it's a nice static. Maybe this is one where, I'm trying to push P&L into it. I'm trying to donate money into it from these other accounts. Now I enter on this third account after I've donated a little bit of drawdown from these 2 accounts into this third one, that more important one. Now my stop, instead of it being, what was it, 19 points? Now my stop on this third account is 5 points, right? So now I'm giving myself an even higher RR trade for this third account. So I guess if you're using minis, you could do something like that. You could use your final risk sync account maybe as a mini or so. I still use micros with my risk syncs, but and then price starts to go in your favor, you could even re-enter the ones you stopped out on as well. Like I would scalp this one, this account, I would scalp it and then re-enter short again on the other accounts I took a stop loss on. Because again, I'm donating a little bit of drawdown from my first 2 accounts into this third one. Instead of a 19-point drawdown from one account, I'm splitting that drawdown up into 3 accounts. Yeah, full port the last one. All right, I'm going to check this out. Here, my bot. Let's see what you got. Yeah, good question. Okay. Yeah, man. As that's a really good question because on stream I did get chopped up a little bit in this Q3 if you remember. I took I think 2 stops in this Q3 because I was trying to trade inside time distortion. I did get a nice long scalp on this one, but I did get a break even. I think I took a what was it, a long? Yeah, I went long here and stopped out on this one, right? Because we got the liquidity sweep. I mean, that's just gonna happen. Sometimes you're just gonna be wrong. Because why was I wrong? We're inside time distortion. So otherwise, these Q3s were not in time distortion. So when we see these legs, the key is the price leg. Okay, we get this price leg. It's an impulse leg. It's a clear leg, right? We can measure this leg right here. These are the more high probable Q3s. So when you get a nice impulse leg to the upside or the downside going into Q3, so let's say this leg is happening, it's pushing into Q3, and then we get the sweep. Now we start, that's when that light bulb goes off. Start looking for all the criteria to be met. Okay, that's when they're a little bit more high probable, when you got a clear push into Q3, sweep of liquidity, then we get the inversion, and we have our targets. Same here. We have a nice clear leg, nice push into Q3, right? And then also, that was the tricky one. And then here again, look, clean push into Q3. Clean push, clean leg, into Q3, right? And then we're getting this criteria met. Yeah, I mean, sometimes, there are sometimes, I try to take them all. I try my best to take them all if I feel confident in it. There are still sometimes if I feel like I'm fighting the draw on liquidity that I skip it. But yeah, it kind of depends on the way candles are printing at the time. That's a really good question. I think the best way to do it is to just use the PD array clues, right? Where are we delivering from? That's always the question in the back of my mind too. If we priced into this 5-minute BISI and we held this 5-minute BISI, I just have to somewhat assume that price still wants something higher, right? Yeah, so Asia and London session, it's a little bit more tricky because there's such low liquidity, right? Liquidity is so much lower, so you can get like fake outs. You can get a lot of fake inverses. When you take your trading, can you look at ES? Oh yeah, I always look at ES. ES is goes hand in hand with every one of my trades almost. If you guys notice, I'm watching for SMTs. Sometimes if ES takes out a key level or rejects a key time level, I'll go break even on NQ, things like that. So never move the final stop placement, correct? Would you just take the hit and look for another opportunity to get back in or reverse direction? Yeah, totally. So it kind of depends. So sometimes what I'll do, like let's say, yeah, so the stop itself is never going to be different. So I wouldn't like alter the stop loss itself. But what sometimes I will do is I might enter a really small size and either look to average up or let it play out. Let's say I entered here, and I would say I'm willing to add. Sometimes I'm willing to add. It comes back to my key level. Let's say it didn't retest. It's not a good example because it did. Let's use this as an example. This is a perfect one. So I marketed in here, and on stream I said I'm willing to add if we come back to TMSO because this trade's still valid for me. So if price would have came back to TMSO, I would have added some more contracts to get a little bit better average fill here. However, doesn't mean I would move my stop loss, right? Because this trade for me, we still lose this BISI. Even if I add, I'm just immediately cutting it. But the stop loss still remains based off the validation of the trade itself. Yeah, 369. I noticed you trade them as well. Yeah, man, they really add up. People don't understand. And if you just stay consistent using micros and don't throw minis in there too much, and you're just taking your high probable models, they can really add up. In my opinion, they're just so much easier to manage, and especially with the Nasdaq. Nasdaq is very like over dramatic, right? The tape goes farther than you expect most times. The wicks are aggressive. The speed is aggressive. So micros kind of let you have a little bit of peace of mind while the trades can play out. And Like I said, all month long in January I used micros and I had a really good month. Didn't have to even click minis once. Why do I color? Yeah, that's a good question. I'm kind of so if I'm on top of my chart game, my 5 minute and 15 minutes will be the same colors, and then the 1 minutes will be the same color. So the 1 minutes are like a grayish tone. The 5 and 15s are more of a brown tone. That's just my OCD though. 100%, you're about 100%, man. Because in the drawdown you get in a funded account, like let's say a 150k, relative to an actual live, like let's say you had an actual 150,000 in cash in the market. Yeah, that drawdown 4,500 with minis is pretty tight. Definitely made much more to be traded for with micros. Yeah, Bill. So that's my average size. My typical size. Most trades I try to either depending on the day. Now this is pre NFP, so pre NFP definitely more base hit type stuff. But normal weeks, yeah, I try to either have anywhere between 15 to 25 micros in my positions at most times. Sometimes I'll do a starter for a speculative trade and I risk sync myself on other accounts. This is why I kind of sound like a broken record on the stream to tell you guys use my account, use my first entry as a risk sync. And if I go into drawdown but the trade remains valid and maybe I do an ad, maybe that's where you look to get your first entry. Otherwise, sometimes I'll start with that small leverage and I'll look to average up as well, try to get up to 15 micros or so, 15 to 20 micros. And that's where you see me do that, targeting time levels and stuff. But yeah, I would say most times I try to end up with my trade having around 15 to 25 micros. Again, as long as the trade remains valid. And then what I'll do is I'll scalp 5 to 10 of those micros for a few $100, and then I'll leave on, 10 micros or something. I kind of do like a hybrid of like internal scalping with longer holds to average up with. I guess that would be the best way to describe my trading. How many screens you use to manage multiple accounts and on charts other than you use your execution on time frame? Well, to be honest, as far as charts go, you're looking at it. When I'm streaming, this is it. I don't have any other screens with charts. Probably wouldn't hurt if I had a 5 minute and 15 minute screen up, but I'm pretty used to, I've kind of gotten, it's like riding a bike to me, switching between the 5 and 15 minute just on screen, drawing my stuff out on that time frame, then going back to the one. I have tons of screens, but only one chart. Screen on my left is a Discord that's talking to you guys. Screen on the right is Top Step X and music playlist. Screen above is a DOM. Screen at the top left is another DOM with multiple tabs. And then top right is like my email and just all this other stuff I'm dealing with. I'm looking for ceiling floors on the 5-15 minute at the beginning of the day. Is it just the closest ones you're marking? Yeah, exactly, Parvez. So like we did today. Because what I'm doing is I'm watching to see where's price constantly, where are we holding price at, right? Because right now you can clearly see price keeps bouncing here. So I look and, are we in some sort of PD array? So when we're in that PD array and price is holding this, it's telling me that we're delivering from it, right? So price is moving away, delivering from this 5-minute BIST, telling me it's a floor, right, for now, until it gets inversed. So any move back down to it, I need to be very cautious trying to short, right? That's why I kept, telling myself over and over again, I'm not going to, even though I'm somewhat tempted to short this with this nice displacement, because we have this 5-minute BIST marked out and we use these as floors and ceilings, it's too risky for me. There's no good RR here to short. I'd rather wait for that confirmation of that BIST getting inversed than look to use our time level to short turtle soup. So yeah, anytime I'm looking at price, I'm seeing where it's rejecting, where it's delivering from, and draw those PD arrays out. Could you talk about how you think about your entries in Q3 reversals? Does it depend on PA or just your criteria? Yep, just the criteria, Chance. There are some days that are a little bit more tricky than others. I'm not going to sit here and act like it's just easy to read Q3 every single time, because it's not. You kind of just have to trust the model and trust the criteria. You get the criteria, you feel good and you feel like you're in line with order flow. It's worth a slap. There's other days like maybe FOMC, day before FOMC, NFP itself. Maybe if, Powell's speaking, Jackson Hole, things like that. Those are the only times I'm a little bit more like discretionary versus mechanical. I still have a little bit discretionary in all my trades, to be honest with you, actually, but way more discretionary on those type of days. Every other day, I still look just for the criteria itself. And I built that criteria specifically through a lot of back testing. And I know Jess has been digging into it pretty deep too. And she's even taken it a step further. I think she's using the late Q2 ones too. She's messing around with that, the statistics on those. Yeah, I do pay attention to Asia and London lows and highs, certainly. I just don't always, I'll just mark them out as liquidity. Like, I've got so many drawings on this chart right now. These are just signatures we want to look for, right? Why was I bullish on the day today? Because look at this. We engineered relative equal highs, right? During Globex. And then from Globex, what did we do? We slowly trickled down into repricing this 15-minute PD array. Now, if we use what I was just talking about with floors and ceilings, right? Reprice into this 15-minute PD array. What did we do? We left a lot of engineered liquidity here, leading up to these relative equal highs, right? So when we see this and we hold these 15-minute PD arrays, this is a good sign that price is likely going to want to come run all this, right? And then what do we have here? Midnight open. Once price closes and displaces back through midnight open, and we have all this signature, and we're delivering from this 15-minute BISI, lots of clues here telling us that price is likely going to be bullish, right? Do you see these? Do you see that structure in there? Do you see how that you could frame that? Now, other times price might just, consolidate, sweep, and then go up, right? So you'll see that signature sweep below London low or something. Then London, that's like a low of day. Vice versa for shorts. Consolidate, sweep, go down at the London high or Asia high, whatever it might be. But again, that's where those 5 and 15-minute PD arrays come into play. They really help give you those floors and ceilings based off the structure that price is forming. Remember, price is always engineering liquidity, right? There's liquidity all over the market. It's constantly engineering it to then run it and then induce it, engineer it and create it again, and then run it. Yeah, 100% Rome. Just waiting for that little bit of signature can really be beneficial. There's nothing wrong with taking 2022 model or anything like that, but it does work out many times. But I think, if you add a little bit more criteria, I think you get a little bit more high probable trade. So did I, wow, I went a full hour. My bad, guys. That was a long time. The time flew by. Well, I guess I'll probably wrap it up. I know, I'd always talk too much, man. This is my worst habit. I told myself before I started making these mentorship videos that I would chill out and only do like 30 to 45 minutes. I've yet to achieve that. I do like hanging out with you guys, so I can't deny that. So anyway, that's going to be it for now. I won't keep you guys any longer. But yeah, it was a fun little market review. I love going through price. I could sit here all night going through all this. But just good recapping these models here.